Hey guys, thank you so much for joining me today. I'm Jen. I'm here with Benjamin Whitby, project lead at Governor, and Mark Richardson, project lead at Bancor. Always nice to have you guys. I know it's been a minute. I had the pleasure of seeing you both at ECC. But we haven't really gotten together and updated the community on what's been happening with Governor and Bancor. And since we've last spoken, then Governor has launched its token. So definitely want to get into that a little bit. Before we do, though, for anybody who isn't familiar with Governor and Bancor, I just want to ask you guys to give us a brief intro, into what you're each building and kind of contributing to the space at the moment before we really get into kind of the deeper details. Ben, maybe you wouldn't mind starting us off?
Sure, absolutely. Thank you for having me. It's always a pleasure to come here. I always really enjoy it talking to you guys. And I guess the high level view of Governor is a general message passing protocol. We get compared with Layer 0, Wormhole, Axelar, those different types of projects. The difference is that our focus is on native permissionless universal control. So that means that we don't use bridges, we don't use wrapping in terms of the native positions. The level of products that we've got out at the moment as part of the Governor protocol include Just to Pay, which has unlocked $500 billion worth of any cross-chain payment positions. That is live and available to test now in the estate. You can go through and go a bunch of different tasks and see the functionality that's available. We've got Just Swap, which is built on top of the Li-Fi toolset and Thorchain to get access to Bitcoin and various other different assets. And of course, we've got Diamond Hands coming. And Diamond Hands is the culmination of all the different MVPs coming together to enable people to create a Bitcoin vault like MakerDAO. MakerDAO uses Ethereum as collateral. The Diamond Hands Governor Vault will use Bitcoin as collateral to enable you to create a stable coin on any chain, but use your Bitcoin as collateral. So it's very much a kind of not your keys, not your crypto ethos. And that's why when we were exploring how we kind of look at the various different tool sets, Governor was top of the tree in terms of enabling people to structure their kind of trading activity on there. And importantly, it's a case of when it comes to the amount of bots and integrations that we've got, the whole structure of the tokenomics rests upon the structure to be able to have permissionless access to the Governor token, and therefore we needed access to an AMM type model and the arbitrage fast lane product to be able to make sure that we get the various different value abstracted into the right place so that the furnace can operate.
Okay, so lots of moving parts, lots of progress for sure since I've spoken with you last, and lots of mention of other things. We hadn't spoken about the furnace before. We spoke about the Arb fast lane a little bit, right? We've spoken about how, like, your use of Carbon DeFi a little bit more, but we're going to kind of dive into all of those as much as we can anyway, right? While focusing really on, with your token launch, how the community can participate, right? How they can acquire Governor and become part of the actual community. But I'm going to hand it over to Mark first. Mark, thank you for being here. Would you give us an intro of Bancor and Carbon DeFi and what you guys are up
to? Sure. I mean, we've got a longer demonstration planned for later on in this call. So a lot of those features and things I'll save the in-depth exploration of until we get there. But essentially, Bancor began life as a way to get around the problem of centralized exchange being a requirement for price discovery on novel tokens. And so that came from a much earlier time. So there's 2017 era, but has remained, I would say, a pressing issue in the industry ever since. And so, yeah, the answer to that was to build a protocol that uses mathematics, right, and an algorithmic approach to market making. That means that anyone can verify, how a price quote was generated, and interact with the market effectively, permissionlessly, and without requiring management of that market by an external intermediary like a private market maker on Coinbase or Binance or something like that. And so our original attempt at solving that problem was the invention of something called the constant product automated market maker, or the constant geometric mean market maker, depending on how you look at it. And the advent of what we call liquidity pools, and at the time, smart tokens, which are now called liquidity provider tokens, or LP tokens for short. And there have been several iterations of that product. And I think that it's worth acknowledging that at the time that this technology sort of came into being, the status quo, or the assumption, was that whoever is issuing a token will have to shoulder the burden of creating a market for it. And the AMM, I think, was a really good answer, with that assumption being the case. And then as time went on and DeFi and blockchain started to pick up more users, there was a definite need for a more agent-based, right? Something more explicitly representing the market view of the person interacting with the protocol. And so for that, you need a slightly different algorithm. And so we borrowed from the same mathematics that underpin AMMs, but then applied it in a new context. And that is called Carbon DeFi, and that's the flagship product for Bancor at the moment. And this is essentially an infinite decentralized order book. And so it's kind of based on the premise that the order book itself exists. You don't need a programmatic element to define it. It's just there. And then people can come in and start quoting their own prices that they want to trade at with the tokens that they have, or the tokens that they want to have. And that is essentially the abstraction that Carbon DeFi represents of what people would call today a CLOB or something like that. Carbon is a much more powerful, much more general version of that concept.
And you do hear a lot about that. So maybe, as we are looking at the product, you can give us a little bit of comparison. And Ben, obviously, we want to hear from you, because you guys had chosen to create your market on Carbon DeFi, right? And I think a lot of what I've gathered from you on previous calls was, not only are you kind of sticking to that original ethos of blockchain and crypto, like you said, not your keys, not your crypto. You guys have decentralization like at the forefront of a lot of what you're building, but your community as well, thinking forward to the actual community and not just creating this to, launch your token and make it available, but it kind of strategically also, right? I think this kind of goes with what Mark is saying. It's kind of giving you more agency as a project. So please feel free to chime in to all of this. I don't want to call on you guys necessarily, right? Like, jump in. Mark, you were going to share your screen so we can kind of check out what Governor has done, the market that they've created, and how the community can participate. And with this, we can talk about the different benefits that, you both are really offering the Governor community and Carbon DeFi users.
Yes, absolutely.
Yeah.
I'm going to share my entire screen because I might be flipping back and forth between a few different tabs so that we can demonstrate the things that we want to demonstrate.
Okay. But
I'll start with the distribution tab here. So Jen, can you confirm for me that this is showing up on your?
It is, but are you able to zoom into it just a little bit for us?
Sure. Something like this, maybe?
Yeah, that's perfect. That's great.
Okay. So all we're looking at here is currently, what assets are distributed across the Governor markets at the moment. And so we can see there's currently a total of 58,438 governor tokens that are up for, for the taking. So these are specific tokens that have an asking price attached to them. And then on the other side, we've got the bidding market. So in BNT, in ETH, USDC, and USDT. So if we have a look at how these prices are distributed, you can see that if we go to explore, so if you come to the Carbon page for the first time, it'll take you straight to the trade page. If you just click on explore up here and then just search for GVNR, you'll see all of the liquidity providers' positions that have already been created for that specific token. And so there's a bit of a mix, right? We've got some USDT things here. We've got governor denominated in ETH. We've got governor denominated in BNT. Now this creates a type of order book that we can trade with as we usually would. And I'm going to show you how to do that because I'm going to use one of my own wallets here for now, and I currently don't have any governor tokens in this wallet. So I'm going to try and get some governor tokens first, and then we're going to create a position on Carbon with them. Now, I want to show you something first, which is that if we go to trade and then use this simple swap widget, and then just click on the 7-day marker here, this will show us the governor price in terms of ETH. But what we want to do is we want to switch this to maybe another token like BNT, for example. And then again, if I click the 7-day here, I'll get the price of governor in BNT. I can also switch the tokens around and get the price of BNT in terms of governor and so on and so forth. Now, because governor is still in its infancy, right? The market price for these things is still somewhat abstract. But there is a centralized exchange listing for it. I think 2, the main one being MEXC, and then I think another one is CoinStore. But really, the liquidity depth on Carbon is much higher than that. And so I would trust the prices on our exchange more than I would trust it anywhere else, to be perfectly frank. Now, so what are we going to do here? So first, let's buy some governor tokens. So I'm here on the swap widget, and I'm just going to interact with the order book the way that the way that you usually would with a swap widget. So for example, I can say spend 100 BNT, and it's telling me that I'm getting a slippage here of 9%. Now this isn't, I don't consider this true slippage at the moment, like I said, because the governor token is still in its infancy. This is compared to the price that you'd be quoted on something like CoinGecko or something right now. But because the market is still establishing itself, it doesn't really mean too much yet. So take this with a grain of salt. And if we check on the routing here, it will show us exactly which order I'm going to be routing through, which is helpful. And then I can confirm confirm this trade if I want to. Now, usually when you're performing a trade, you have to approve tokens first. This is an ERC20 and Ethereum sort of specific issue. The app will always give you the option if you want to approve unlimited tokens. I usually turn this off just to err on the side of caution. I don't like having unlimited approvals, throughout a bunch of different wallets. So then MetaMask is going to ask me to confirm the token approval. And so I'm going to approve exactly the number of tokens that I want to spend. And assuming that MetaMask doesn't screw this up for me, which I don't know, could be with StreamYard as well. Okay, no, I've got the transaction here. So I'm going to go ahead and approve that on my Ledger device. Here we are. And then we're going to wait for this transaction to get mined, which usually only takes, a minute or two. Now, if you're trading on decentralized exchanges with some level of frequency, sometimes it makes sense to approve a bunch of tokens ahead of time so that you don't have to do this approval every time. But in this particular case for this demonstration, we're going to do everything as sort of, best security practices. So we're just going to approve what we need. So then after we've got that approval, we can confirm the transaction. And again, I can check to see that all of these things are correct. I'm swapping out 100 BNT. I'm getting 38 governor tokens. So I will take that trade. And on my ledger device, it's just asking me to confirm that transaction. And so I'm going to go ahead and do that. Okay, so transaction was submitted. And then just like the approval process, once this gets included in a block, I should have 38.35 governor tokens waiting for me in my wallet. And here we are. That transaction is indeed complete. And we can view that on Etherscan via the app. And you see, here it is. So here's the transaction that we just processed via Carbon. So you can see the 100 BNT tokens coming out and the 38 governor tokens coming in to my wallet. Now, if we go back to the Explore page, one of the things that we can actually do is then go and have a look at, which of these strategies did we actually, interact with. So you can see here's one that's got 5 trades. And if I click on that one, and sometimes it takes a little while to update, but we should see here eventually that the trade is going to be logged against the specific position that I traded with. And this is going to depend on RPC frequency and that kind of thing. It's not a limitation of the app, but mostly the data providers that we interact with in order to get this data. But long story short, we now have some governor tokens in our wallet, which is right. Yeah, this should be in here somewhere. I think I'm going to have to include it as a custom token here, but that's okay. So now what I'm going to do is we're going to go back to the trade page, and instead of performing a swap directly via that route, instead we are going to set up a strategy with the governor token and let's say with BNT. And so you'll see that there's a couple of different options that we have here. One is for de facto liquidity provisioning, which means we're going to provide bids and asks around each other. And this is good to support, support outsider interaction with this specific market. So generally what you'll do is you'll choose a certain price that is slightly above wherever the marked price is, and then slightly below. And then we're going to provide both tokens to that range and provide what is essentially a concentrated liquidity position. Now, while that's useful, you're essentially taking a sort of naive or neutral view of that marketplace, whereas most traders have a specific view of how the market is going to evolve. And so what we will do instead is we're going to explore this idea of a recurring order, which means to place liquidity in the book such that it sells us at a certain price and then buys back at a different price. And then we can explore this idea of using limit and ranges as well. So first, let's have a look at what a recurring order looks like with 2 different ranges. So you can see here, I've got buy or sell BNT with governor. So using governor as my numeraire. I'm going to switch that around just because I feel like using BNT as numeraire is kind of more natural from my perspective, but we've got that flexibility. We can also do this with ETH, for example. And this is using natural native ETH, not wrapped ETH. The protocol supports both, but there's no requirement to use one or the other. It supports ETH natively. And Bancor always has.
Mark,
okay, so yes.
Quick question for you. You're using ETH and BNT as examples. Is that because there are already existing strategies?
Yeah, I'm glad you brought that up.
Those 2 tokens, or?
Yeah, we can use any token we want. So for example, we currently don't have a market for governor versus Aave. So why don't we make one? Here we are. And again, I'm going to click on the last 7 days. Okay, so now I'm using Aave as my numeraire here. So essentially, as the price of governor moves down versus Aave, I can provide Aave tokens to buy that governor when it reaches a certain level, and then I can provide governor tokens to sell it back for Aave when it reaches a different level. So what I'm going to do is I'm going to set both of these to ranges. which is going to give me the geometric mean of these two different price bounds, but it allows for partial fills. So this means that I don't have to wait, specifically for the market appetite to hit a specific price. I can instead provide liquidity across a range and let people chip away at that liquidity as they like. This is very similar to placing many different orders inside an order book, and you'll see that this happens all the time on centralized exchanges like Binance. But where the difference between that system and our system is that on Binance, you have discrete liquidity. So little specific bins of liquidity that have a specific price, and all of the tokens inside that bin will clear at the same price. Whereas on Carbon, we allow for continuously enumerated liquidity. So essentially the integral rather than the discrete sum. And this means that you can place infinitely many limit orders across this range. And then the way that the curve is set up is to always give you the geometric mean. So let's go ahead and create this market between Governor and Aave. We've got our ranges. So this is essentially meaning that, if the price dips down further, then I'm willing to sort of buy Governor here with Aave tokens. I don't have any Aave tokens on me right now. But what I can say is, as the price then comes back up to a certain range, I'm happy to sell those Governor tokens for Aave tokens. And these are the controls that we would, that we have access to represent our position. Now we've got the visual UI on the side, and this is going to be updating these numbers accordingly. But if we don't want to, if we don't want to deal with this thing, or if we've got a more specific, more precise number in mind, then we can just change the numbers on the side here. Now, after that, we just have to choose how many tokens we want to commit to this range. I'm going to put 10 Governor tokens in this one, and I don't have any Aave, so I'll put 0 Aave tokens in this one, just to show you how to set up the position. But obviously, we can put any number of Governor tokens and any number of Aave tokens here. Now, you'll see here I'm using add to cart. This means that I can create I can plan lots of different strategies and then combine them all in a single transaction. So maybe we'll do that next. So we've got our Governor Aave position. Now let's set up a Governor WBTC position, for example. Okay. And then I'm going to do the same thing. So in this order, rather than have a recurring position, let's do a simple limit range. So this means that just like a normal limit order position would work, we're going to set a specific price for our Governor tokens, but this time it's denominated in terms of WBTC. So you can see here we're currently down at 4013. So I'm going to set my my limit sell for the Governor tokens that I have to a slightly higher price. One of the things that you can do here, by the way, is if you want to sell them right away, you can just say use market, and it will put the sell price at exactly the current price versus the tokens that you've chosen. Or you can say, plus 5%, plus 1%, or something like that. So let's say we're going to go plus 5%. So if the Governor price appreciates 5% versus BTC, then I want to trade my my Governor tokens for BTC. And we're going to be using another 10. So here's another 10 Governor tokens that we're contributing to this strategy. We'll add that to cart. And then for the last strategy, let's do versus ETH. Why not? And I've got a bit of ETH. So for this one, we're going to say we're going to create a concentrated liquidity position. And so you'll see here, you've got a choice, right? You can use the chart, the price chart, the way that we have been up until now with the other examples. But then we also have this other useful tool that helps to kind of visualize how your liquidity is going to be distributed around the current price, right? Around the current estimate for the market price, which is 305 ETH. So here, what I'm going to do is I'm just going to choose sort of how wide I want my liquidity to be. So at the moment, we're going 3% to the upside and about 3% to the downside. So let's just make them both 3 to keep it nice and square. Now at this level, I can then choose how I want to set my fee. So the fee here is a bit of a misnomer in my opinion. This is just the fixed spread that you're going to pay, or that the taker pays on every trade that they trade against your liquidity. So we can set it super fine, right? We can even set it to 0 if we want to just, or we can set it close to 0 if we want to, support the governor project by creating some liquidity around this range. Or if we want to be super greedy, we can set it to like 1%. There's really, it's any number that you want, right? So rather than a specific liquidity pool having a prescribed fee tier that you have to subscribe to, we let you choose any fee that you want, any number of decimal places of precision. So let's say that this is a strategy that we want to create just to try and bring some attention to the token. So we're going to set a very, very low fee here. And we're going to say that we want to add 10 governor tokens here. Now you'll note that I've selected to use governor here. And that means that it automatically calculates the amount of ETH that I'm going to be providing to the other side of this strategy. I could have done it the opposite way, right? If I wanted to add, a certain amount of ETH, then it would calculate the amount of governor that I'm going to add to this strategy. So we're going to stick with governor because I know that I bought 30 of them, and so we're going to use 3 strategies each with 10. And this is going to require about $14 in ETH from us for this strategy. It's going to ask us to quickly check that these numbers look right, and then we can add that to cart. And then when we're ready, we can click on the basket, right, of all of the different orders, check them out, make sure that they look correct. After we've reviewed them, we can then sign all 3 of these transactions at once. Now for governor, again, I'm going to turn off the unlimited approval just for best practices. If you're doing a lot of strategies, again, I don't recommend setting an unlimited approval, but you can set an approval for a very high number of tokens that's still reasonable. I just think unlimited approvals are generally a bad idea. Now, after we've approved that this should be the only token that we need to approve. I'm accepting that on my ledger right now. Here we are. And again, we're just going to be waiting for that approval to appear in the block. And then after it does, we'll get a notification here on MetaMask, and the app as well will also notify us when that transaction has been completed. Here we are. And then we can just sign all 3 of those strategies at once.
Mark, before we move on, I'm going to ask that maybe, at some point I have a couple of questions about the process and some different ways to achieve certain things from like the user perspective that we may not have gone over. And I want to make it clear to them, like to our viewers as well. So before we go on, let me know, and I'm going to, give you some questions that I've gotten.
Sure. I mean, we're waiting for the transaction to.
Cool. Then I'll do it now.
You mind, so may as well.
Yeah. Okay. So you showed us swapping, right?
Mm-hmm.
And you spoke a little bit about slippage. On Carbon DeFi, there is users have the ability to create orders. You went over recurring orders and how it can be a limit or range. But what about just a single limit order? Or what if they want to just buy into Governor and they don't want it to be a recurring buying and selling the way that we had explained it? Can we show them how they can achieve something like that on Carbon?
I did, right? The Governor BTC strategy is just
the single sell, right? Okay.
Single sell. So we could also do a single buy. So let's do that. So yeah, okay. So you can see that, here are the strategies that we just set up. So let's go ahead and create another one. So you're right. So whenever you're taking a market instead of making one, you have to pay slippage, right? It's an inescapable force of market uncertainty, and there's just no way around it. But you can get around slippage by moving from taking to making. So for example, instead of using this swap widget, what I can do instead is say, you know what, I want to buy Governor at exactly this price point versus ETH. And so what I can do is I'm going to switch from sell to buy. And I'm going to use the exact market price. And let's go ahead and put in like 0.01, so $25 worth of ETH at this price point. Now, what I'm doing now is I'm basically bidding on Governor with exactly, exactly 0.1 ETH at the current market estimate, right? Which is the one that we're currently pulling from CoinGecko. And so I can create this strategy, and what it's going to do is then advertise to someone else in the market, right? Just openly broadcast my position to other users of the blockchain that I have an interest of trading, my ETH for Governor at this specific price. Now, when someone takes that price, you receive exactly the price that you quoted by definition. So there's no uncertainty to the, there's no uncertainty in this transaction. If you said that, you want to trade exactly 0.01 ETH for, we'd have to multiply these together to get the number of Governor tokens. But that'll be exactly the Governor tokens you get here, 18.27. So this completely avoids slippage altogether. By definition, you are protected against that kind of uncertainty.
I mean, that's pretty amazing in terms of to be able to do that on a decentralized system. Yeah, absolutely. It's,
well, and in advance too. You know what I mean? It's not like you're just getting zero slippage. You're actually able to preset your trade. Okay, I know Governor's at this. I'm pretty confident it's going to go down to this, and I'm going to wait. And when it's at 4 times what it is now, I'm going to go ahead and sell it. I know Rufus here, by the way.
This is one ringtone told over the course of several rings. And the story.
That's okay. We appreciate your Carbon DeFi shirt. In the meantime, you got the opportunity to show that off. And Rufus, I get it. Never sell your Governor is what he's saying. Nothing of what Mark is saying is financial advice, and nothing of what Rufus is saying is financial advice. But
we're just talking about like how markets operate. And I think that there's a lot of hubris in cryptocurrency, and not just in cryptocurrency. I think for a lot of traders and things. But it's one of the things that I posted just recently. Is you hear people, especially in crypto, say, oh, why is the price going down? It's like more people are selling than buying. Or why is the price going up? More people are buying than selling. That's not true. There are always exactly the same number of buyers as sells by definition, right? For any trade to occur, someone needs to buy something from someone else who is selling it to the person that bought it from them. And so the strength of the market really comes from people that are interested in participating in these kinds of exchange transactions with each other. And the beauty of DEX infrastructure is that you can do that in without having to concede custody of the things that you're trading, and instead just use the interface as a way of advertising to other people what it is that you want to do. And I should point out that the swap widget and things here that we've provided are not a requirement to interact with Carbon DeFi. So one of the things I wanted to show you was that we can also trade via common aggregators. Now the aggregator that I use more than I think any other aggregator is Odos. This is a team that I've met many times before, and I have a deep appreciation for the product that they've built. And so one of the things that I thought we might do, just quickly, and my ledger went to sleep, so give me 1 second here, is just to demonstrate that some of the positions that we just created are already live and are being picked up by, by other liquidity sources. So for example, here we can take, the ETH that I currently have in my wallet. Let's refresh the path. There we go. And you can see that it's already identified carbon as being the most attractive source of liquidity for the governor token. And so we're going to trade 0.5 ETH, 0.05 ETH for about 85 governor. And so here, if I click on swap, okay, it's going to route this position, route this trade through carbon. So I can confirm it here, and then sign it on my ledger. Okay, and it submitted that transaction. Now, what's interesting is that we're coming out through a third-party service provider now, but it's still using carbon in the background, right? We're getting 100% of the volume straight through carbon. So on this aggregator, you're going to get precisely the same trade that you would have got if you were interacting with carbon directly. But this also means that if you are quoting prices on carbon, all of the people that are using Odos will see the prices that you're quoting, right? And this goes for all of the other aggregators that are currently integrated with carbon. So these positions that you're creating, right, you don't need to wait for someone to come to the carbon app to use it, right? It's automatically a part of the rest of the DeFi processes that happen on Ethereum. And that's essentially how the product was structured, right? Was to recognize or acknowledge that all of these different nodes that we call protocols in DeFi all interact with each other, right? They all share edges with each other by the token pairs that they're denominated in. And so we kind of, I don't want to say exploit that, but like we leverage that sort of distributed network to allow users to quote arbitrary prices and still participate in a market, even if people never discover the app itself. So it really is, I think, a beautiful way of thinking about how markets are constructed. But yeah, if you,
it really is. I mean, that just those 2 minutes there, those then 2 minutes where you're talking about the aggregation of DeFi positions across the market, and the fact that the market position is always matched. There's always there has to be a seller for every buyer. There has to be. But the level of ability that we now have in the decentralized space, I believe, just far outweighs anything that exists in the centralized exchange space. There's no way that exchange-based products would be very happy for an aggregate layer to kind of come on and allow their users to see better prices on other exchanges. It's just, yeah, it's amazing to be able to do that.
So let's do one more exercise, because I just bought some governor here via Odos. So let's do something with it. Again, I'm going to interact with the governor ETH market. Well, actually, we've already done ETH. Let's do something else. Let's do.
Have we done USDT?
Yeah, let's do USDT. Good choice. So we take USDT, and again, we'll pull up the price chart. Okay. So again, this is a market in its infancy, so we don't have a huge amount of price data, but as users come to Carbon and create these liquidity positions, this price data will get a lot more robust. But let's say that we take CoinGecko at its word, which you shouldn't, but 1.41 is probably, it's actually a pretty good estimate, I think, based on the liquidity positions that I've seen around. So let's say then I just bought this governor at about $1.40. But I'm optimistic that in the near term, we will get up to, let's say, $1.88. I think that's realistic. So what I can do is I can just set my limit up to $1.88. And if I wanted to, I can put all of my governor in there, and then that's it, right? If the market has an appetite to buy governor at 1.88, then that's the price that we'll sell it, and they'll get the USDT for that. But what if I don't necessarily think that that we're going to get all the way to there in my specific time horizon by like tomorrow or next week or something? Then what we can do is convert it to a range and say, well, you know what? I just bought this governor at $1.40. I would be happy to begin selling my governor back at a profit of, whatever this is, about 50%, something like that. So wait, what's so that'll be plus 70, so 210.
210.
Like that. Yeah. So let's say that I want to get a profit of 50%, then we put it up to 210 here. And I can actually just do that here at the min, 2.10. Then, maybe I think, well, maybe it's going to double in price, right? So maybe a 50% profit is too, is too pessimistic. What I can then say is just fine. Let's multiply my buy price by 2. And now I'm going to be selling continuously from a profit margin of 50% to a profit margin of 100%. And that's what this does. Now, the curve works here using the familiar, y equals 1 over x sort of, style of curvature, of convexity. So it's always going to give me the geometric mean of these two prices, which I'm not going to do that in my head because square roots are hard, but you get the idea. So, okay, let's bring this down and say to the top of this, most recent candle and from the bottom of this most recent candle, right? So I've just bought at 1.41. And I'm going to sell between 1.6 and 1.89, right? That's a fairly healthy, day trader style profit margin.
Mark, before you complete this, I have a question.
Yeah.
Earlier, when you were talking about creating ranges, you compared them to centralized exchanges. How when there's a range on Carbon DeFi, whether it's a buy or a sell, it's as if a user is going and creating a bunch of different limit orders, dozens of different limit orders on a centralized exchange. When you're comparing, I think a lot of our users are going to be familiar with AMMs and other decentralized exchanges. So for them, let's compare that for a second, right? How many, you're saying dozens of these orders, depending on the range, of course, right? So for that user, they're paying gas. If they're acting as a taker, they're going to sell some or they're going to buy some. They're paying gas on each of those. And there's that potential slippage that they have to incur. So how does the gas work on Carbon DeFi when there's a range like that and it's all of these different limit orders on the back end? Are they paying for gas every time their order is filled?
No, that's a really good question. So no, you only have to pay gas on a blockchain when you're doing something to update its state, right? And the way that the carbon orders are structured means that essentially all of the trading behavior that it might participate in is already defined from the moment that you first create the strategy. So you only have to pay the gas once, and it's not like it's a huge amount of gas. Then when people are trading with that strategy, since they are updating the state, then it'll be a part of their gas transaction to update it. So in exactly the same way that, if you provide liquidity to one of the original liquidity pools, of course you would pay gas during that liquidity provision event. But then after that, all of the trading that happens afterwards is contingent on people who are trading with you to pay the gas to update that state. So you can trade many times. So you'll see I've got some older strategies here, like this one that traded 77 times as I was trading ETH versus BNT, and I didn't pay gas on any of those trades, right? I paid gas at the very start, and then it's just been trading without me having to interact with it at all. So no gas payments afterwards. And
so that was a recurring strategy then with the 77 trades. That was that buying low and selling high sort of strategy. So with something like that as well, they're only paying that gas fee one time to create the strategy.
Yes, correct. And then the same is going to be true of, our Governor ETH position here that we just created with $30 in it. All of these will fill without the person who created that trading position having to pay gas ever again. Now, if you want to come and update the strategy, then of course you're changing the state of the blockchain, which will mean that you will have to pay gas on that transaction. But as long as you're not performing an update, then people will essentially pay the gas on your behalf. So we can do that here. So let's have a look at our Governor ETH strategy that we just created. You'll see on the little icons, we can click on these, and forgive the price chart not showing up immediately. This is something that we're working on based on the bespoke price source that we have for Governor. But yeah, as this populates, we can go and have a look at our charts. It will tell us, all of the trading actions that have been executed against our strategy in this table below. We can download all of these activities, like if you need it for tax purposes or something like that. This just generates a CSV of all of your transactions, which is, I think, a convenient way to manage things. But then we've also got this management button at the top. And so if we click on that, we can decide, well, maybe we want to change something about this strategy. We can withdraw funds from it. We can put more funds into it. We can edit the prices, so on and so forth. We can even pause the strategy, which is something that I think maybe we should talk about. So it's not the case that you necessarily need to withdraw all of your funds from the system if you want to stop trading. So this position here has some ETH in it. And maybe, ETH is about to moonshot or something. And I've decided, I'm going to wait for the market to settle down for a little while before I decide how I'm going to continue my trading in the future. One of the things that you can do is, rather than have to delete and withdraw everything, you can actually just pause the strategy. And that will essentially set all of the prices to infinity. Like, this is actually how it works on the smart contracts. Which technically means people can still trade with you, but no one would at an infinite price, right? Because it just means that they donate tokens to you for nothing in return. So again, I'm just going to sign this here, and this is a very low gas expense transaction, and this means that I can come back later, after I've done my technical analysis, or after I've reconsidered whatever my approach is going to be, and that will create a there it is there, right? An inactive budget, an inactive trading pair, but it still has the budget there. So maybe time has gone on, and I'm interested now in activating this thing again. I can go here and say edit prices, and it will bring me straight back and allow me to then sort of start readjusting, my trades here. And I have access to everything, right? I can convert this to a liquidity position. I can turn it to just a limit range or a recurring. I can do whatever I want. So let's set this to, for example, a limit range. No, let's do recurring, just as 2 limits. So we've had a look at ranges trading against each other, I think, a lot, but we can just do 2 limits. So from the current market rate, which is about 305, what I can do is say I want to sell at 5% and buy at minus 5%. And this will mean that if the governor price comes down another 5%, then my ETH will be bidding on the governor token at that level. And all of those governor tokens will become available at my buy range, which will be 10%, well, 5% higher from the current level, and a little bit over 10% from the buy level. And so, yeah, this is just trading 2 limits versus each other, which you might want to call grid trading. It's very similar to grid trading, although that's another term that's been sort of bastardized in cryptocurrency and DeFi over the last couple of years. But to each their own. If that's the term that helps make it clear for you, then by all means use it.
Now,
So
one of the differences between Carbon and other AMMs on the market that really kind of captured my attention was the discrete pricing that people could actually kind of put in place, which my experience of AMMs previously had always involved kind of MEV or retracement or impermanent loss positions. So getting into the detail on this is incredibly beneficial for people, but it's going to be a lot for people to kind of skill up, because many people in crypto are used to going to centralized exchanges and hitting market order, and it takes them a decent while to kind of extend from those market orders to limit orders. And this, of course, is allowing them to go even to the next level in terms of get really sophisticated tools available them through an AMM that realistically would be equivalent to a much more sophisticated market maker type activity, with algorithms and other different types of positioning. So it's incredibly valuable. And of course, the real beauty of it from a protocol perspective is because it's an AMM, the protocol can come and utilize it in terms of its activity and its trading activity. As we move through into more bots, more AIs, more protocols, that's going to be an increasing kind of trend. So yeah, I very much see that kind of DEX SEX ratio going up and to the right for a very long time.
Yeah,
Then
I agree.
I also think, as you were saying, it's going to take a minute for people to kind of skill up. I think that the majority of DeFi users, we have kind of been trained to just accept the swap, right? Like, I'm just going to buy it at market price. But then we've had to really kind of discover on our own. I remember when I got into DeFi, it was like, but this was the price they showed me. And now why have I wound up with this? And I didn't know about slippage. You mentioned MEV, right? We didn't really get to talk about sandwich attacks, but I'm realizing more and more as I'm really engaging with newer communities, newer DeFi users, they really don't know what sandwich attacks are. They don't understand slippage. And so for them, it may very well be easier to go into something like Carbon DeFi and say, I don't know about any of this. I don't want to be exposed to this. All I want to do is buy Governor at $1.35. Or and then that's it. They set that limit order. They don't have to worry about those things that, I always say sandwich attacks are one of DeFi's most predatory, and they are, and trying to escape those and understand those different things, that comes with its own sort of learning curve. So this is also a very nice product for those that are new to DeFi and haven't become so accustomed to swapping, and buying just at the market price, I think.
And there were definite limits as well, because it's not just the market price, it's also the level of sophistication that you've got as a user. I don't want to pick on any one particular exchange, but pretty much all exchanges, centralized exchanges, have got their easy app and their more advanced app, in which they can kind of position and come through. And then typically the really sophisticated traders in the marketplace that exist today create their own algorithms and come through and shape things in very different kind of strategies, the way they want to play against a particular asset or what they perceive to be the tools that they want to use it. But yeah, bringing all of that to the table in a way that can remove sandwich attacks, can remove MEV, and set up either very simple kind of positions where you can buy and sell at a particular point, or you can just spot an ape in depending on the level of persistence that you want. Or, as we saw Mark set up earlier, that recurring range position that really gives you a lot of sophistication and allows you to take very, very much longer term positions with comfort and peace of mind that your own laptop doesn't have to be on. You don't have to pay gas every time there's a price movement, or you're not going to get retraced in terms of price comes back down again. It's so cool. It's just like, I'm almost lost for words just how cool it is and how important it is for people to realize just what a game changer Carbon is in the marketplace, in terms of the next stage of AMMs.
Thank you, Ben.
I encourage the Governor community. I encourage the Governor community to, try out some things. There's a bunch of Governor here that has asking prices and bidding prices. So, you can buy these things, you can sell them back, create your own strategies and so on. And the more people that do this, like, it's really from that kind of behavior that a market properly emerges, right? It's a difficult thing to force. I mean, of course, we can try, but really it's that organic user engagement that that really produces a healthy marketplace. And I think that we've got something here that makes it makes it kind of exciting to think about these kinds of things, and it gives you that ability to think and reason about how it is that you want to engage with that marketplace. So rather than just like click a button and stake your tokens, which, I mean, fine, it appeals to a certain a certain type of person. And if you want to, you can do that here as well. Like if you are a person that just wants to be involved somehow, but you don't like, thinking about things, be reminded that we also have a full range position here, which is akin to, traditional liquidity providing and that sort of thing. But I think that it is natural to want to explore some of these other options, right? And think about, what price do you want to enter at? What price do you want to exit at? That sort of thing. And the more people that do that, the more volume will move through the exchange. The more precise the price data will be that gets generated around GVNR. And yeah, the more the project will flourish. So I'm open for anyone that wants to talk about what they're doing. Like, obviously, I'm not going to provide financial advice, but if people are just like experimenting with things and want to understand some of these features and that kind of thing, Jen and I are usually, fairly open to having those kinds of discussions.
Yeah,
Well,
absolutely.
also, if you make sure that you don't approve unlimited tokens, you can't go too wrong, right? So
Yeah.
And if you're really scared, move tokens into a different wallet so you can experiment, so you're not exposing your entire bags to smart contract kind of executions. Get really familiar. And it's like anything in crypto, you have to do your own research.
Yeah, 100%. I know that we're at the top of the hour, guys. I heard a chime. Does somebody need to cut out, or do you guys have a few minutes by chance?
I'm all good.
Yeah?
I can
Mark,
hang
do you
around
have
a little longer.
Okay, I
Yeah,
had
I can
some
hang out for a little.
questions. So I do, let me see. This was a question that came in on X, actually. And I'm looking to clarify because I know you guys both have sort of a vault system. How you referred to it might be a little bit different. But I'm thinking, because it's talking about the liquidity routing position or decisions, that this is maybe a Carbon DeFi Bancor question. Mark, do you see the question up here? What role does the master vault play in market intelligence or liquidity routing decisions? Is there an internal logic for steering?
So I think the master vault, I have to remember what we call that object in Carbon. It might be the master vault. The master vault is essentially just a place where all of the tokens live, right? So this is borrowing very much from Balancer version 2 in terms of the paradigmatic change, where in Bancor, when Bancor first developed liquidity pools, the idea was each liquidity pool is its own separate smart contract that holds its own reserve balances of tokens. And that could have been 3 or 4 tokens or 6 tokens or any number of tokens, but they were all living in that one smart contract. And then when someone creates a new liquidity pool, you basically have a contract factory that creates a new liquidity pool instance, and that there would be tokens inside that liquidity pool instead, right? And so you would have lots of different token balances spread across lots of different liquidity pools, which are all their own separate smart contracts. When Balancer v2 was developed, the developers made a very interesting observation, which is you don't actually need the token balances to be in their own separate smart contracts. Instead, you can put all of the token balances in one place, and then the liquidity pool is just the logic that interacts with that central vault. And this has a profound sort of architectural simplification to the way that the smart contracts are implemented. and also a lot of security benefits for running things around a central vault and things like that. So the master vault really is just where tokens live. And then there's different smart contract infrastructure that kind of decorates it, that determines how, you know, the exchange rates between tokens coming into that vault and out of that vault should be calculated. And so you get exactly the same system as you have if all of those tokens are in separate places. But now you basically just remove the logic layer from the token storage layer, which is a simpler way to do things, and has some gas optimization consequences and things like that.
Perfect. Thank you so much, Ben. Somebody is asking, what role does Governor play? We're talking about Governor. They want to know what role it plays.
Governor in terms of the token. So it's a multifaceted token that we've built off the tokenomics model that Bitcoin Swiss has been publishing for the last kind of 7 years. It obviously serves as a governance token, a payment token, and an abstracted gas token as well. So there's lots of different kind of utility and functionality that gets put into the tokenomics itself, because it's a cross-chain protocol, a general message passing protocol in that respect. The activity that you incur on different chains means that you accrue fees on different chains, etc., etc. Instead of making every call cross-chain call, what we do is we abstract that gas payments into Governor via we actually collect the fees on a particular chain, then utilize the ARB fast line to turn that into a token that can be more easily transported cross-chain using secure various different kind of methods and channels, and then channel that into the Governor protocol and the fairness mechanism to actually kind of operate that deflationary position. So it's very much taken in. What we did is, when we were building the tokenomics, we built out from the best of Bitcoin, the best of Ethereum, and the best of Maker. So with Bitcoin, there's 21 million. Governor, there's only 20. So we go spinal tap, one less. With Ethereum, the ERP 559 position obviously takes that deflationary burn. We turn that knob up to the max in that respect. And then with the maker position in terms of probably I would suggest the most successful DAO activity other than Aave at this moment in time. I know Bancor's community is pretty amazing, but Aave and Maker really kind of stand out in terms of their protocols with regards to governance. So that's how we describe it in the market. Again, there's a lot to unpick in terms of doing that, but you know, everybody that's in crypto should be really smart, so it shouldn't be a problem.
You mentioned the furnace. I know that we are out of time. I want to invite you back because, you know, I had even said the other day that you guys are kind of using the whole Bancor like tech stack at the moment, right? And the furnace and the ARB fast lane, these come into play, and I would love to discuss those a little bit more in depth, of course.
Without the Bancor ARB fast lane, just couldn't do it. It's like there's fundamental technology there that, you know, we have to use, which is why we've, you know, also it's a fully permissionless stack that we're building on. So, you know, utilizing lit and POCT in order to make sure that it's the most permissionless cross-chain experience that you can get today, and obviously we'll keep evolving.
That's fantastic. 2 more things, if I may. I'm really sorry. I'll make it quick. Rufus, once again, tell the butler, Governor AI bot, he'll manage it for you one day. This brings up a question. Is there any plan of like an AI sort of anything where somebody will be able to kind of create these governor strategies, or too soon to, yeah?
We're going to see lots and lots more AI agents. Another thing I talk about when talking to kind of more traditional finance people is at HSBC, when I was there, we used to talk about trying to onboard the next billion users. obviously now with crypto, we can go to the full world population of 8 billion people. Everybody can get involved in this space and start to go on their financial journey. In the last 3 years, we've now seen AI robots come to a stage where, Elon talks about there being probably one robot per, or one agent per human. I actually think that's going to go much further than that, because we've all got devices, phones, and they're all going to need wallets and different accounts. So yeah, we're going to move rapidly into a place where we've probably got the need for 20 billion, maybe 30 billion accounts in the world. And if you go back just 15 years, there were only 2.5 billion people with a Visa card. And now we're going to go from 2.5 billion to 20 billion. It's just going to be a world that we don't recognize.
And when you look at like that, I mean, I know when you're talking about Visa cards and stuff, like if we're going to compare that to AI agents, I know I'm probably going to want more than one. Yeah, right? Absolutely. The average person has more than one credit card.
So all of those will be accounts. All of those will be driving transactions. They'll all need to go and get gas and tokens and other different types of activity, which is going to force all of the crypto activity, in my view, into DEXs.
Yeah.
That's why we're so excited to work with you guys at Carbon and Bancor.
Okay. My last thing, because I know, and I might be putting you both, I mean, I'd put you on the spot anyway, but there was maybe some alpha, something that the community might be looking forward to. Are you able to speak on that at all? I mean, obviously we're looking forward to Governor and its progression, and we're looking, we're excited about the token launching, but
yeah,
maybe
we can talk about that. So, as Mark alluded to, making markets is really hard, but it's really important. So we thought all the smart people that follow Governor should all follow Bancor, and all the Bancorians that exist in the world should all understand how Governor understands how important carbon is. So we'd be looking to do some kind of airdrop to various different communities, and probably some kind of trading activity that revolves around exploring making markets.
Awesome. Okay. Well, thank you. I wasn't, I mean, it was more than what I expected. And I think it might even be more than what our audience was expecting also, but that's exciting. So thank you. Congratulations on everything so far. It's definitely an exciting time. Mark, you also, I know that you guys have just been building. I saw an announcement that you just had another audit completed. So something may very well be in the works there. I know better than to ask you about it, so I won't.
Thank you.
You're welcome, but I'm sure we will once you are ready. So Ben, definitely do, again, want to have you back. We could talk about the fairness. You mentioned it a couple of times, especially because a question came in, in regards to the token, and we're talking about trading it and things of the sort. So when I can have you back, I would absolutely love to have you both. And thank you to all of our viewers for tuning in. And yeah, I mean, I'll see you guys soon, of course. And wonderful event, by the way, at ECC.
Oh, you're so welcome. Thank you for coming. It was a pleasure to have everybody there.
Yeah, it was fantastic. Awesome. Well, thank you guys so much. Thank you again to all of our viewers, and we will see you soon.
Thank you so much.
See you guys.